Ray Dalio just gave an economic warning on CNBC that a lot of people have been talking about. And it's interesting because his warning is not tariffs, his warning is not inflation, and his warning is not consumer spending slowing down. It's government spending. Here's what he said, quote, "The first thing is the debt issue. We have a very severe supply-demand problem. The United States has to sell a quantity of debt that the world is not going to want to buy." Now, Ray Dalio, for those of you who don't know, is the founder of Bridgewater, which is the largest hedge fund in the world, so he has some experience in this space. And what he's saying is that the United States government has been borrowing a lot of money and now they could be facing some issues. And to put that in perspective, the United States government has one source of revenue, tax dollars from taxpayers. So you go to work and then you pay the government taxes. Well, what we've been seeing is that the United States government generates tax dollars and then they spend all that money. And then the government continues to spend even more money. This is called deficit spending, spending money that you don't have. Now, to fund this spending, the United States government has been going into debt, which then begs the question, who is lending this money to the United States government? Well, they can borrow money from you and I, regular people, if we buy treasuries. A treasury is a loan that anybody can make to the United States government. So if you buy a treasury, you invest in a treasury, you are lending money to the United States government. Foreign governments can also lend money to the United States government. So the United States can borrow money from China and Japan, which they've already been doing. And then the United States government can borrow money from our central bank, the Federal Reserve Bank, which they've also been doing. And this is where Ray Dalio says that we are going to see a supply and demand problem, where the United States government has all this debt, all the supply of debt, and it's not slowing down. We're continuing to spend a lot of money that we don't have. And the demand to buy that debt is going down. Foreign countries are not going to want to keep lending money to the United States government. Foreign countries may not want to keep owning the dollar, which can create a problem for the United States government. It can create a problem for the United States dollar. This is what he says needs to be done in order to fix the problem. He says the US deficit needs to go from a projected level of 7.2% of GDP to about 3% of GDP. What does that mean? Well, let me break it down. In 2024, the United States government had a $1.83 trillion deficit anticipated, meaning we spent around $1.83 trillion that we did not have. Well, in 2024, the United States economy was about $29 trillion large. That is our GDP. GDP is a measure of all spending that happens in our economy. And this is where what Ray Dalio says, in order to help fix this problem, the supply-demand issue of countries not wanting to lend money to the United States, which could create a credit crisis, it could create a whole lot of issues of the United States government facing a potential default. He says in order to prevent that, we need to shrink our deficit spending to a smaller piece of our GDP. He didn't say we need to get rid of deficit spending. He just says that we need to shrink it. And he says, quote, "That's a big deal. You are going to see shocking developments in terms of how that's going to be dealt with." What does that mean? Shrinking your deficit is going to be painful. Now, we've been covering this in Market Briefs. Again, Market Briefs is my free financial newsletter where every day my team at Briefs Media publishes a newsletter that breaks down what's happening in our economy, the housing market, the stock market, the crypto market, and the global economy into a fun and witty and easy to read newsletter. It's free. You can read it in less than 5 minutes every morning. And we have hundreds of thousands of investors that are reading Market Briefs every day. So if you have not joined Market Briefs yet, I have the link for you to join down in the description below. So when he talks about this being difficult, what he means by that is when the government spends money, it does stimulate the economy. And the way that you reduce the deficit is either A, you can increase how much money you generate from taxes, or B, you can cut government spending, and C, in this instance, you can also grow the economy. Because remember, Ray Dalio is saying that deficit spending needs to shrink relative to our GDP. So if deficit spending stayed the same, but the GDP grew, now the deficit spending is a smaller portion of our total economy. Here's why that can be painful. Number one, if you reduce government spending, that's going to impact somebody. Now, remember, every dollar spent is a dollar somebody else earns. If you go to Chipotle and you buy a bowl, well, you're helping to keep the employees in business. If you go buy the extra guac, well, that helps Chipotle even more. The more Chipotle you buy, the more Chipotles that are going to be opened. If you stop buying Chipotle, they're not going to be able to open more stores. They might even have to lay off some of their employees. So our economic system runs on spending. The more money people spend, the more money other people make, period. Well, the largest spender in our economy is not Chipotle, it's not you and me, it's not Jeff Bezos, it's the government. And when the government spends money, that stimulates the economy. But of course, there's a consequence to deficit spending. Because if the government could just spend an unlimited amount of money, why do we have to pay taxes in the first place? And the reason why is because if the government keeps creating money out of thin air through the help of our central bank, the Federal Reserve Bank, the value of each individual dollar goes down. Because remember, our what we call money isn't backed by a precious metal. Our dollars are not backed by physical gold. They used to be, but then in 1971, President Richard Nixon temporarily took the dollar off of the gold standard, and this gave our central bank, the Federal Reserve Bank, the ability to essentially print an unlimited amount of money. Because before 1971, if the Federal Reserve Bank wanted to print more money, it needed more collateral, meaning we needed more gold to really justify that more printing. Well, after 1971, now our central bank didn't have that same collateral requirement. Now, because we're no longer backed by gold, the Federal Reserve Bank could print more dollars. And so this was great in the short term because now the United States government was able to spend an unlimited amount of money. We were able to pay off all of the bills. But then came the problem of inflation. The 1971 money printing boom created a stimulus in the economy, but then it led to the late 1970s inflation crisis because of all the money printing that happened. Because when you just create more dollars out of thin air, the value of each individual dollar goes down, which in turn causes the prices of things to go up. See, a lot of people assume that inflation is the prices of things going up. That's actually a byproduct of inflation. Inflation comes from the word inflate. It's when you inflate the amount of dollars out there. You inflate the monetary supply. So you increase how much dollars are out there, causing the value of each individual dollar to go down, causing the prices of things to go up. And this is where Ray Dalio is saying that all this deficit spending that we're doing is going to create an issue. And it's already starting to create an issue of supply and demand, where we have this huge need for foreign countries to keep lending money to the United States. But foreign countries are not feeling that same desire to lend money to the United States, which could create more problems into the United States. And this is where what he said, Ray Dalio said, that this issue could result in a restructuring of the debt. It could result in the United States applying pressure on other countries to buy the debt, or even cutting off payments to some other creditor countries. Now, when he says restructuring of debt, generally when you hear the word restructuring in the business world, that means some sort of bankruptcy. A company is restructuring their debt when they are in bankruptcy. It's just a legal term. It's some sort of default. When he talks about the United States applying pressure on other countries to buy the debt, that can mean a lot of things. That could mean tariffs to pressure them to buy our debt. It could mean other sort of economic kind of pressure to force them to buy our debt. And then he talks about potentially cutting off payments to some creditor countries, which would essentially be a default. Meaning if we owe you money, but we can't get more dollars lent to us, then maybe we just don't pay our bills. And that could create a big problem because the United States government has always been known to pay its bills. That doesn't mean that they always run a balanced budget, but they've always paid their bills. If you read any economics textbook, what it will tell you is that lending money to the United States government, meaning buying a treasury, is a risk-free investment. That's what it's categorized as. And the reason why is because the United States government always pays its bills, and it can always pay its bills because number one, it can tax people in the United States, and number two, It has the ability to work with the Federal Reserve Bank to print more money. So if it has a bill to pay and they can't generate the tax dollars, they can just print the money. But this is where Ray Dalio is saying we could potentially be cutting off payments to creditor countries, which could potentially mean defaulting on the debt. Why does that matter? Well, if you are the world's superpower, you have the world's reserve currency, the dollar, and you can't make your payments, you can now run into some problems. That could make the inflation issue worse, that could create more economic issues, that could create more investment issues. I mean, if the United States government potentially, again, this is just what Ray Dalio says, not what's happening. If the United States government was to not make a payment, you bet that people thinking about lending money to the United States government are now going to think twice, because it was supposed to be a risk-free investment, and now if this risk-free investment is not paying its bills, well, that's no longer a risk-free investment. That's the concern. And this is where Ray Dalio goes on to say, quote, just as we are seeing political and geopolitical shifts that seem unimaginable to most people, if you look at history, you will see that these things repeat over and over again. What is he talking about? Well, history doesn't exactly repeat itself, it does rhyme. And what he says is that every great empire has a timeline. Every currency, every world's reserve currency has a timeline. And the path that each currency and every empire goes through is similar. Yes, there are some differences, but they go through very similar patterns. And what he's saying here is that the United States government has been spending a lot of money that we don't have, and that comes with consequences. And unless we make some changes, that's going to create long-term pain for the economy, the dollar, inflation, and these are things that he's been talking about for a long time. And now he's saying that if we want to prolong the health of the dollar, we want to prolong the health of the United States being the world's reserve currency, we want to prolong being the world's superpower, we need to reduce the deficit relative to our GDP. That way we don't keep running on all of this deficit spending, because this deficit spending essentially make the United States fat. We've been spending and living off of debt. We haven't been facing crazy inflation. I know the last few years have been high inflation, but relative to many other countries in the world, we haven't been facing crazy inflation because we're the reserve currency and we've become very fat. And when you become fat, you become complacent and you assume that everything should be given to you in a certain way. Well, if other countries start to lose faith in the dollar and they start to look for alternatives and they start to not lend money to the United States and we start to see the value of the dollar drop, that could create more problems. This is what Ray Dalio was talking about. Now, I know that that can seem very scary. This is where I want to now take one more step now to talk about every shift in the economy also creates opportunities. And this is where I want you to take a deep breath and understand that every shift comes with opportunities. And your job as a financially savvy investor is not to run off of anxiety, not to run off of fear, not to run off of these crazy emotions up or down, is to look for where the opportunity is. And that could mean, number one, starting with just systemizing your money, always having some money to save, always having some money to invest, always having some of money to spend, not spending all of your money. Because if you're currently living paycheck to paycheck and you don't have any money to save or invest, well, that's the first problem you got to worry about. Okay, you got to get your money in order before you start stressing about everything else. Once you have the money to invest, you have some extra money, now you start looking for the opportunities. And this can create a lot of different opportunities depending on where you look. Maybe this means that you diversify how you're investing your money. Maybe you look into some hard assets. Maybe you look into some international assets as a way to diversify. Again, you don't want to make rash decisions. And of course, I'm just a random guy on YouTube. I can't tell you what to do. I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube, and then continue to invest in your financial education and study shifts that are happening in the economy to see where the investment opportunities are. Because the financially savvy don't get emotional, they look for the opportunities. That's what I want you to do. Again, I'll be keeping you posted here on my channel, and then my team is trying to do the same thing on Market Briefs every single day. So if you have not joined Market Briefs yet, I have the link for you down in the description. But this is where, again, it is very helpful for you to understand what's happening in the macro economy, while you also build your financial education of learning how to invest. That way you can capitalize on opportunities that might be coming your way.